Hi, this is Doug English with Act Advisors with your May 2025 update. Well, if your neck hurts, you must have been paying attention to the markets in April because it was back and forth dramatically in the month of April. We started out okay, and then, of course, tariffs got to be a big discussion point. They were about to be implemented on the world, and the markets dramatically sold off. Equity markets worldwide and unusually bond markets as well. Thankfully, the administration paid attention to that data and stepped back from most of the tariffs, causing a huge rebound in the markets in the middle of April. And then, of course, there was the discussion about removing Jerome Powell from the Fed, which caused, again, a bunch of fear. Markets sell back off again. That was walked back by the administration, and everything basically at this point is the same as it was at the beginning of April. Both the bond and stock markets were relatively flat for the month of April, give or take 1%. So everybody from the most conservative to the most aggressive is going to be within 1% of zero for the month of April. And we're glad for that. Just glad to have gotten to the end of it with it not being nearly as bad as it was in the middle. So a couple things to remind you. In the first place, don't worry too much about the short term. It does tend to average out over time. April's a great example. Another is when you need money, do not let the headlines drive your decision. We have strategies well tried for many years for how to source income for you. So when you need money, know that when the equity markets are down more than 10%, we're not selling stocks to create your income unless you're taking a humongous percentage of your account out. We do not want you to sell low. So when we get over a 10% decline in equities, we try to sell from fixed income if at all possible. Now, there were a couple of there was a significant change in your account late in April, and that is the addition of a small international position. We have not had any international holdings in your account for years, but there's been some momentum building in that space, mostly based on the weakening of the US dollar, the weakening of our currency. Well, so we have established about a 10% weighting in a tracking index for the European markets, and you can look to see that in your portfolio beginning in May. For the rotations, the stock rotation went to cash several months ago. It avoided this whole situation, and that position is going to remain in cash because it uses a little longer period of time than just a month to decide when to go back in. Plus, it's earning a nice yield. The bond rotation also is going to stay right where it was into the month of May. So no changes in either your stock or bond rotation, just that little bit of international added in. And just a reminder that we have a plan when volatility happens. Our job is to do everything we can to protect and grow your portfolio, even in that situation. And you should not stop doing your travel with your family, taking care of the things you do. Your portfolio is designed to be able to sustain through these periods of time and get you the money when you need it.